Imagine the SEC waving a giant neon "Welcome DeFi Builders" sign. Sounds pretty wild, right? Well, hold on to that thought, because what I uncovered at Monday's Crypto Roundtable throws the old rulebook straight out of the window. So there I was, coffee in one hand, Twitter doom scrolling in the other, when a headline smacked me harder than my phone hitting my face at 2 AM. The SEC plans innovation exemption for on-chain products. Now, my first reaction was, that's I've heard kind of that tune before, right? But I then dug in, and there's a plot twist. The new SEC chair, that's Paul Atkins, actually wants to fast-track crypto innovation instead of karate chopping it into compliance oblivion. Now, it just might shock you, but I am not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money that you invest. You should always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only. Okay, so now all the legal dragons have been slain, let's unbox this beast together, because the stakes for builders, traders, and moon-chasing hodlers, they just couldn't be any higher. So picture the problem, right? You've built a slick DeFi protocol that lets grandma, collateralize her vintage Beanie Babies in exchange for yield-bearing stablecoins. It's a tough laugh, right? Tough. But I've seen kind of weirder use cases in the past. Now, you're ready to ship, you're ready to hire, and maybe even buy that celebratory pizza slice with extra truffle kind of shavings. But the moment that you file with the SEC, you're handed a phone book thick checklist, custody rules, broker-dealer regulations, exchange registration hoops, each more Byzantine than the last, right? Most founders burn 6 figures in legal fees before writing a single line of production code. Now, that red tape is why thousands of devs hit Ctrl+Z on their US ambitions and respawn in Singapore, Dubai, or the crypto-curious islands of some place that you've never heard of. Enter Paul Atkins, the ex-lobbyist turned crypto whisperer at the SEC. Now, he rolls in on Monday, sleeves literally rolled up, dad move energy, if you will, and drops the phrase innovation exception, right? Now, think of it kind of like learner's permit for DeFi, right? You still abide by traffic lights, no rug pulls, no double spending, yet you're allowed to test drive on US highways without registering as a full-blown securities exchange, at least temporarily. Now, if you kind of clear a handful of conditions, transparent smart contract code, KYC-like guardrails, monthly audits, boom, you're live. Okay, stats time, because I promised receipts. Right now, according to the Electronic Capital's developer report, the US lost roughly 42% of its crypto dev market share between 2018 and 2024. Now, that's not a brain drain, that is a brain torrent, Niagara style, right? Meanwhile, of course, the Europeans' Commission papers, show that regulatory sandbox programs trimmed fintech go-to-market times by an average of 40%. So Atkins' playbook basically copy-pastes that sandbox magic onto US soil and screams, build here, pretty please. But let's rewind to why the SEC even needs a rebrand. Remember Gary, enforcement first Gensler? Well, his regime vibe was sue now, clarify later. Ripple, Coinbase, Uniswap, lawsuits everywhere. You get a lawsuit, you get a lawsuit, everybody gets a lawsuit. Like Opera handing out subpoenas, right? Now, you get a Wells notice, and a Wells notice you will get. Now, the industry's collective mood, somewhere between kind of, I guess I'm moving to Mars and just looking elsewhere. And that's when Gensler finally resigned on January 20th, because if he didn't, he was going to be fired. Let's be honest with it. Resignation was kind of, you're resigning or you're fired, pick one. And he chose to resign. Now, the crypto crowd, of course, practically popped the champagne in Discord voice chats all around the world. Now, you can fast forward to today's climax, and Atkins not only suggests that innovation exemption, he publicly roasts the prior administration regulation by litigation strategy. That's kind of like a new coach trying to tell fans, yeah, the old playbook stank, right? And here's our shiny new, spread offense. Now, at least I say, but actions, I should say, Trump, pun intended, speeches, right? So we already see the kind of SEC dismissing stale enforcement cases and publishing guidance that common staking kind of activists don't necessarily violate securities laws. That regulation, regulatory kind of sunshine, I guess, is kind of where we once had regulatory hailstorms. So just imagine, right? You're a DeFi startup reading this kind of tea leaf avalanche, and your kind of roadmap suddenly shifts. Instead of, bribing your devs with kind of, I guess, kind of beach tokens to relocate, you actually build in Austin, Denver, or shout out to my viewers kind of repping Miami, right? Venture kind of funds smelling Uncle Sam's green light might actually reroute billions back to the States. Heck, you and I might finally get that kind of dreamy US compliant self-custody robo-advisor that we drooled over on napkins back in 2021's bull run. Okay. Quick pit stop then, because if you're hungry for real-time kind of brain power on these policy twists, you want to jump into our free educational Discord. There's a link chilling in the description down below. It's kind of like Hogwarts for crypto nerds, minus kind of the talking hats. Though some of our kind of mods do sling magical memes at 2 AM Dubai time. Now let's pepper in nonsense, because Twitter threads rarely do, right? Atkins said that the exemption, is conditional. The translation here is that you'll need to share data, maybe limit token distributions, possibly geofence, certain features. But once kind of proposed, or at least one proposed rule, I should say, is that projects must polish, open source code, and publish it, and, undergo quarterly, third-party audits. Now, that kind of checks two boxes then, consumer protection and transparency. So while kind of dodging the 18th month kind of paperwork labyrinth. But skeptics, they do ask some pretty valid questions. Couldn't bad actors exploit a looser framework? And the answer to that is absolutely. There's always the risk of a fly-by-night dev, zipping through the kind of exemption door, launching rug Inu for 20 tokens and ghosting holders, right? But regulators have kill switches. A fail an audit, face fines, or face shutdown. It's a carrot and stick kind of ballet. But let's shift gears to the macro impact here, because President Trump, eyeing re-election headlines, apparently kind of told advisors that he wants America crowned crypto capital of the planet, right? Now, politicos, love catchphrases, but we saw Canada leapfrog the US with the world's first spot Bitcoin ETF in 2021, right? An invitation, exemption, flips that narrative a little, right? If corporate treasuries can tokenize bonds on-chain legally within the US borders, well, Wall Street's heavyweights might migrate from test nets to main nets faster than you can say yield curve. Now we need to cue the personal anecdote. Last year, I tried to spin up a tiny yield aggregator just for educational content. There were no tokens, there were no promises, just a smart contract that auto-compounded staking rewards. My lawyer, retainer, kind of quote, 35 grand, roughly the price of a kind of mildly used Tesla Model 3. To maybe get a no action letter. Now I kind of shelved the project and turned to GitHub repo into meme art. If Atkins' exemption kind of gains steam here, well, that experiment could morph from meme into an actual community tool without remortgaging my espresso budget. And speaking of budgets, let's talk about Blofin. Now, if you need a regulated spot to kind of trade while you kind of explore these kind of policy changes, Blofin's crypto exchange has your back. And yes, the link below is an affiliate link. That supports the channel here. So if you use it and you do sign up, you'll actually just feed my caffeine addiction while also snagging some pretty decent discounted fees. It's kind of a win-win, but do be aware that it is an affiliate link and they are not available in all jurisdictions. More details can be found in the description. All right then, it's a nerd moment. The SEC's Crypto Task Force, launched January 21, will kind of release its first report within a few months. And I should put in a few months, right? Now, according to the Senate testimony anyway, now expect a kind of, I guess, smorgasbord of kind of definitions. You know, what exactly is a decentralized exchange if smart contracts kind of match orders and DAOs handle governance? You know, will wrapped securities require separate disclosures? Will staking yields need to be reported like bond coupons? Right? The notice and comment process, like I think kind of Reddit AMA, but with pinstripe suits, means that the public can voice feedback before any rules actually solidify. So mark your calendars, right? Because the comment window could actually rival GameStop threads in length. Okay, so we've now hit the narrative peak. So what does all of this mean for your portfolio? Well, if the US capital re-enters crypto, right, liquidity deepens, spreads tighten, and sophisticated derivatives spring up like mushrooms after rain. Now, historically, when regulation clarifies, see the 1990s.com SEC updates, venture funding in that sector shot up threefold within 2 years. Of course, correlation isn't, cautionary or caution, right? It's important to understand that patterns rhyme like Snoop Dogg on a chill beat. And yet, there's a curveball. Congress, lawmakers could drop bills counteracting SEC efforts here, especially if election rhetoric kind of turns anti-crypto once again. But the bipartisan kind of whispers suggests both sides actually finally realize that pushing innovators offshore just hands the tech crown to rival economies. So call me cautiously kind of optimistic then, right? Emphasis on the cautiously. All right, let's land the plane, because if Atkins successfully threads the needle, right, balancing consumer safeguards with permissionless innovation, the US might transform from regulatory buzzkill to blockchain bellwether. Devs could code at Starbucks without VPN anxiety. Investors might hold tokens in their IRA accounts legally, and maybe, just maybe, Grandma's Beanie Baby Yield Fund becomes a viral case study in fintech textbooks. Probably not, but anyway. If that future excites you half as much as it excites me, then you want to keep these notification bells primed, because we'll track every twist like it's the final lap of a Formula One race. And remember, full deep dives, Q&A, hangouts, and sarcastic market memes are brewing right now in our free Discord classroom. There's a link lounging down below. Pop in, say hi, and flex your best GIF game.